Hey everyone, this is the first of hopefully many videos that I'll be making. I'd like to try to start making videos for everyone because to me, it's easier to learn from a video rather than reading, and I imagine for the general person it probably is too. So let's get started. This is a 6-month graph of the Dow. As you can see, we've been in a downtrend and then have been trading slightly upward in some very choppy settings. It's gone up and then down and then up and then down real fast. So it's been hard to stay in a position that just tracks the market. And lately the market has also been traded real thinly. There's not been a whole lot of professional investing. No mutual funds have been buying up big positions. It's been very uncertain. So this kind of drifting up is not real solid. I'm going to draw some trend lines here for you, and you can see where we're looking at. We're looking at that being the major trend, which is a slight uptrend, and then here is another trend that's going on. It's another area of resistance, and what this forms is a triangle. And a triangle is a place in the market where if stocks were to move higher out of the triangle, it is a continuation of this uptrend. And if stocks fall lower, it is a turning point into a new trend. So it's getting close to having a breakout up and down because it's going to get to the point eventually. Today we fell a good bit, which is actually, it was a little more surprising. I didn't think we were going to fall that much, but we fell a good bit, and that puts us looking at, if we fall a little bit lower, we might be breaking out of that triangle down. Of course, as always, we're looking for a big volume, such as this day or any of these days, to accompany our price move, so we can get a good idea that that's where the majority of people are doing. If it's a big day and we're moving down, it's going to be a lot of selling, and it's going to be a day of distribution. And if it's a big day and we're going up, it's going to be accumulation, which is buying. Moving on to the NASDAQ, you can see that the NASDAQ is a little more defined. It's less choppy. We've got a cup and handle right here, actually, and I don't know if we're going to break out up, but if we can pull up to this area and move higher, I would want us to break out higher than this. Higher than this would be around the 2600, I guess, 25.5 range. So we've got a good while to go. So if it looks like we've created a bottom, you're going to want to see it might bounce off here. It's really not worth investing in something that's going to track this if it's going to go up here and then bounce. If we do fall lower, however, we've got a lot more room to fall than we do. So I would look for us, if we fall, to go here. We do have a triangle in this market as well. We can get something like this going. So it's a little more far-fetched than the other triangle. I'd say it's more of a cup and handle, but it's either going to break down or it's going to go up. And so the important thing is that you're prepared and that we know about this. So I would look for the next couple days with some big volume, hopefully. As you can see, it's very thinly traded, to determine our market move. I sold out of QID today, which is a short of the NASDAQ 100. This is a graph QQQQ, which is Power Shares. It's an ETF that tracks the NASDAQ 100, and QID is a ProShares ETF that shorts the NASDAQ 100. And what I saw in this graph was, it looks like I thought we were going to bounce off this 200-day moving average, because you can see this day right here on August 21st, it went down and then it pulled back up, which showed some support. It showed that people started buying when it reached those levels. But today, it fell back down to that levels and closed pretty well down near the bottom of the range, which suggests some solid selling, especially with our volume being higher than yesterday. It's definitely a day of distribution, which is selling. So look, we're going to see if we fall some more. We're going to see if we fall below this 50-day moving average. And I don't know what we're going to do, but we can either fall below that or bounce off of it. And if we bounce off of it, we're going to go back up to this range, and it's just like in the Nasdaq. We're going to try to go above this for a breakout, and then our next test is these two tops right here. And if we can go above those, then it's definitely a buy point. I have one stock that we've already talked about, and it's Thor Tech Corp. This stock I bought after this breakaway gap, and I got shaken out right here. I didn't have enough gains in it to want to risk any, so I went ahead and took those gains. We've gotten high volume. We got even more high volume today. It was on the top 5 list for Investors.com's stock on the move, with I think 200 maybe just 100% increased volume. But you can see it here, higher volume today, and it's moved up. And it's actually the high on this day was 25.87, and today we closed at 25.37. So we've got about 50 more cents to clear the range. So I would set a buy point at about $26, and if it does that, that's a solid buy, because that's an all-time high, I believe. And it looks real good. Breakaway gaps are typically the first step to some pretty good yields. So think about it. If it goes up to 26, I would recommend buying at that point. So that is going to conclude our first video. I hope you've enjoyed this. Please, please, please let me know what you think. And hopefully I can get some more videos out to you soon. Have a good night.